Jameel Ahmad. He's the Director of Investment Strategy at NAGA in London. Great to have you back with us, Jameel. Now, a damning report into Boeing. Has there been any market reaction into what the US lawmakers have found?
Well, actually, we do expect for Boeing to be one of the main stocks to watch when the US trading session opens in not too long from now. But yesterday, the dip was only 0.16%. But I think no matter how you look at this, Boeing has been in the headlines all too often, for all too often the wrong reasons in recent times. And this is very sad news, and the health and the aviation experts have to clarify this matter. But generally, the Boeing price in 2020, we started about $330. Today, we're at about $160, which is a loss of close to 50%. But of course, the aviation sector, like the travel sector, the tourism sector, all of those share prices have been really deeply impacted by the pandemic and that fallout. So that has played a part in the picture. But Boeing has dropped so much in 2020. But no matter how you look at these headlines, there has to be answers to these questions, and they're really regrettable.
It sure does. Now, investors have also been eagerly awaiting the outcome of the US Federal Reserve's latest policy meeting. They've been meeting over the last couple of days. What do investors want to hear from Chairman Jerome Powell?
So essentially, steady goes the message, steady goes the ship. We expect for Fed Chair Jerome Powell and overall the Federal Reserve to beat to the same drum, that the narrative will be quite cautious, but at the same time acknowledging that business activity and economic activity is improving from where we were at the fallout of the pandemic. There's still some way to go, but to have some sort of message, or at least unofficial message in there, that this is a very fluid situation, this pandemic can change. We all hope there's going to be a cure, but of course things might get worse in terms of second waves and other spikes of infections, and there could still be a lot more economic challenges to come. So expect for the Federal Reserve to leave the door somewhat open, even if they don't put this out today, that we will do more should we need to do more. And that's pretty much consistent across all of the other central banks right now.
Now, staying in the US, we know Hurricane Sally has made landfall in Alabama, and now as it traveled along the Gulf Coast, it also disrupted oil production there. Has that had any of an effect on oil prices?
It has. So far today, we've seen an oil price uptick by 2%, and it's more 1.5% at time of writing. US oil prices are now steadily improving back towards the $40 handle on level. So we do see some impact. Having said that, we look overall at oil prices. They suffered a drop of more than $5 just over 1 week ago, based on the technology sell-off and the investor rotation that caused global turmoil. So we do think there's a little bit of recovery in play there. Time will tell as to whether this disrupts the production and the supply in the market. If it does, it's not actually going to be a bad thing for prices. It's not a bad thing for producers either, because no matter how you look at it right now, there's a pandemic taking place. So that means that economies are still not at the levels that they were before. And there's also an oversupply that remains in the market. There has been this way for the past 5 years or so. So if there is a little bit less supply coming in, this could help price stability over the medium and longer term. But overall, how you look at it, $40 in oil is still very low for many producing oil nations.
It sure is. Jameel Ahmad from NAGA in London, thank you as always for your analysis.